Welcome back to Class 3 of the Black Redemption Strategy, the Family Policy Strategy. Today, we learn how to come together to pool resources and pass wealth to every generation. In Class 2, we looked at life insurance as the engine, but for the engine to move a whole family, we need a collective strategy. This move doesn't require a six-figure income or perfect credit. It requires a family that decides to come together. Individual action is good, but collective action is transformational. By pooling resources, a $500,000 policy becomes affordable for everyone. 3 siblings splitting a premium pay less than they likely spend on dining out. That is how we build scale. Collective action also provides protection. If one sibling hits hardship, the backup payer system ensures the policy never lapses. We aren't just planning for today, we are planting trees whose shade our grandchildren will enjoy. Setting this up correctly takes 5 steps. First, get parents medically checked now. Insurability disappears with age. Second, hold the family financial meeting to agree on coverage. And third, choose an independent agent who can shop for the best rates, not a captive one. Step 4 is critical. Structure the policy correctly. The parent is the owner, and all children are named as beneficiaries with explicit percentages. Finally, create a family insurance covenant, a sacred agreement on who pays and where documents are kept. Verbal agreements mean nothing legally. The most dangerous mistake is naming only one child and assuming they will share. Legally, they don't have to. This mistake has destroyed families. The correct structure names every heir on the policy form itself, preserving both your wealth and your relationships. What if a sibling stops paying? A strong strategy survives reality. Most policies have a 30-day grace period, and your covenant should designate a backup payer to step in temporarily. We must plan for the crisis before it happens. After several years, you can use the policy's own cash value to pay premiums. This is a premium offset. And if a sibling permanently withdraws, the reduced paid-up option keeps a smaller policy in force forever, with no more premiums required. You never lose everything. For larger legacies, we move to the Irrevocable Life Insurance Trust, or ILIT. This legal entity owns the policy for you, shielding the death benefit from estate taxes and creditors. It ensures your family's inheritance stays inside the family. An ILIT provides 3 massive benefits. It keeps the payout out of your taxable estate, protects funds from lawsuits or bankruptcies of beneficiaries, and allows you to set rules for distributions, like requiring financial literacy training before access. Once the parents are covered, we look at the grandchildren, ensuring them at birth locks in the lowest possible rates for life and builds cash value for college or business startups. It is the greatest gift a parent can give. This is your roadmap. Foundation in the first 2 years, growing the layer in years 3 to 5, multiplying your wealth by year 10, and finally, the harvest, where the next generation enters adulthood with no student debt and a legacy already planted. This generation's sacrifice is the next generation's starting line. We will close the gap because we chose differently. That is redemption. That is legacy. I'll see you in Class 4, Home Ownership. Thank you for joining. Let's finish the setup.